Hi everyone, welcome to today's video. So on today's video, I'm going to speak about one stock that I'm very bullish about from a long-term perspective. Now, let me very quickly define what long-term means. Some of you might be thinking that, okay, this is my first janam and I have to hold a stock till 7th janam to book profit. That is long-term. No, that is not long-term. Long-term simply means that you're holding a stock up until its next breakout. This is my definition. This is not industry definition, but let me very quickly take you to Nifty 50 chart and explain what I mean. Because understanding this concept is really important for you to figure out till what point you should be holding a stock. Okay, so here is the Nifty 50 chart, and what you will notice is that it is almost touching this trend line and it is very close to a breakout. Now, two things can happen. One is that the markets start falling and it falls back, and then at some subsequent point in time, it gives a breakout. Or a second option might happen that the market actually gives a real breakout and it starts trending upwards from this point and makes a new lifetime high. What is the probability of that happening, not happening? I cannot say too much about it, but this is what I would say. That this is a very important resistance line. It has touched again and again and again. Now, if a resistance is tested over and over again, then it usually gives a breakout. It might happen that a breakout might not come at this very juncture, but it will come out in a few months. So a more pertinent question to ask here is that, okay, if the market has to make a new lifetime high, then what needs to run? HDFC needs to run. Now, I can make an entire video on this topic, but to cut the long story short, HDFC has a massive weight on Nifty 50. It has underperformed the market. So here is the snippet for HDFC Bank, and you can check its last 5-year performance. It has not even doubled in size. So that categorically shows that HDFC Bank is undervalued and the entire HDFC group is undervalued. So the stock that I'm going to talk about today comes from the HDFC group, and it is one of the most undervalued HDFC group stock, and it is HDFC Life Insurance. Now, on this video, I'm going to talk about three things. One, I'm going to help you understand the industry overview of the insurance sector in India. I will give you some historic context so that you are able to better understand how the private players in India are able to evolve their service and strengthen their business model in India. Number two, I will talk about the fact that why HDFC Life Insurance right now is at a great buying level. Third and finally, I will talk about in conjunction with LIC. Now, why do I feel that LIC will get crushed from this point or will not show sustained period of growth? But on the flip side, private insurance companies like HDFC Life are going to make new lifetime highs. So let us kickstart the discussion, and in case you are interested in learning more about what type of stocks do I prefer buying, you can check some of my favorite small cases in the description box. It's an excellent option for newcomers in the stock market in case you are looking to make theme-based investments. So let me very quickly present you the industry overview of insurance sector in India. So here is chart number 1, which shows the insurance penetration across different countries of the world. If you scroll down, you will see Taiwan has 17.4%, you will see South Korea 11.6%, and you will keep on scrolling up until Mexico 2.6%. And you will imagine that, Akshat, you forgot to put like India on this chart. Well, India is not on this chart. That is how low the insurance penetration in India is. So this is opportunity one for insurance company to build their business, because if they can just simply target more people, then this is more revenues for them. Second chart, take a look at it here, and what you will notice is that even people who are buying insurance in India, the insurance prices in India are very, very low. This is identified by premium per capita. So if you aggregate chart 1 and chart 2, what do you get? You get this simple formula that the revenues of insurance companies are likely to go up from this point. Why? Because the number of people or the quantity of people buying insurance is likely to rise. How much? We don't know, and neither do we care. Second key thing, the price per customer is also going to rise with time. I will also show you further data to prove this point. So to cut the long story short, this is a highly profitable industry. One could argue that it will grow by 20% or 5%, but growth is 100% going to come in the insurance sector in India. Now, here is my hypothesis. So hypothesis means that this is the assumption with which I am making a bet on something like HDFC Life Insurance. My assumption is that the dominance of something like LIC is going to come down significantly. That's one. Second, the private insurers are going to gain a lot of market share and they are going to jack up prices like anything. And this indirectly means that private insurers in India are going to enjoy at least a decade of really, really strong growth. Now, why am I saying it? Let me help you understand the historic context. And this brings us to point number 2, which is around the history of insurance in India. So basically, it was the British time when the insurance industry picked up in India and the first insurance company was formed in India. It was called as Oriental Life Insurance and it was formed back in 1818. Then a lot of local players started to come in. There was foreign investment also in insurance even back in the day. And a lot of small players, they started cropping up. By 1956, the situation was such that there were approximately 250 insurance companies in India. And at that point in time, the Indian government decided that we are going to hold insurance as a national asset and we are going to nationalize insurance. So LIC, or the previous version of LIC, was formed during that time. And for a significant period in time in India's history, LIC held 100% market share in the insurance space. Then India slowly started to open up its entire market, not just in insurance, but in terms of FDIs, FIIs, etc., etc. They started opening up their market so that they could do more world trade. And that has benefited a lot of us. Just to tell you a very quick example, for example, there was a lot of charm in terms of going to the US. People who went to the US and came back to their village, they used to be considered as gods. Now when people go to the US and comes back, no one bothers. Even if they would have brought some chocolate, then we will say that, you know what, I can get this in my nukkad only. So why go to the US to get this crap? So that is the power of globalization, and we as normal citizens have benefited immensely by our economy opening up. So anyways, coming back to the insurance sector. So even the insurance sector was deregulated, and slowly what started happening was that LIC started to lose its market share. Now LIC's market share stands at roughly 63-64%, and private players have started to build up their business model quite aggressively. Now what is most amazing about this story is the rate of growth of LIC now and the rate of growth of private players. So this is very interesting, and this is from HDFC Life Insurance, and what you will see is that if you take a 5-year CAGR, they have been growing at a rate between 17% to 20% in this 3 to 5 year time zone. So the growth rate is roughly 17 to 20%. Now do the same exercise for LIC. So here is the data. They are growing at literally half the rate. Now this is hugely problematic, because it simply means that over the next few years, LIC is going to lose a significant chunk of its market share to top private players in the insurance space. So that begs the question that who are the top private insurance players in India right now? So this is the premium market share by company, and you can categorically see that, hey, 53-54% LIC, because we are talking about the premiums, not the entire insurance, but this gives a very good proxy. So roughly 53 is controlled by LIC. What about HDFC? Almost 15%. It comes second. Then comes SBI, and then comes ICICI. So now let us move to point 3, where we will systematically understand as to why something like HDFC Life and even ICICI Insurance, they are going to grow from this point, and why is it that these government oriented insurance companies, they are going to suffer. There are 100 different reasons, but let me point out some very important reasons here. But the most important reason comes from the product mix that these companies are trying to sell. So here is the split of product share by company, and what you will notice are different definitions. So let me very quickly help you understand this. When it comes to annuity and group referrals, this is a highly profit oriented game for any company. If they are selling more of this type of product, they will be making a lot more money. When it comes to participating type of products, they again make a lot of profit. But on the flip side, if you are selling non-participating, or if you are selling ULIPs, then these are not very profit-oriented products for companies. Now you don't need to sit and understand what is participating, what is non-participating. We are not trying to become LIC agents or insurance salesmen. We just need a basic understanding what type of products are being sold by different companies and whether or not are they profit-oriented products or not. So if you do this analysis, you will quickly see that, hey, this part is very profitable for HDFC Life. This part is also profitable. This part is not that great, but this entire pie is quite profitable for HDFC Life. Now let us run the same analysis for LIC, and what you will notice is this, that this literally is participating. This is not a highly profitable product. So what I'm getting at it very simple. When it comes to private insurers, they are doing adequate market research. They are doing customer targeting. They are undertaking customer survey. They are developing their insurance products accordingly. And why are they doing all this headache? To sell highly profitable products. They are already well underway. And LIC on the other hand is playing the ULIPs game. So they just want to sell ULIPs, which is not a very highly profitable product for LIC. It is a highly profitable product for LIC agents. Now, the primary advantage of selling products that are already profitable is that you can jack up the prices. Now, this year itself, HDFC Life Insurance has increased the prices of its term insurance plans by 15 to 20%. Why? Because they already control a profitable market. It is like saying that, hey, that Apple is able to charge, let's say, 25,000 more for iPhone 14 compared to iPhone 13. Why is it able to do it? Because iPhone 13 itself is very, very expensive. So why a 25,000 increase is being done? Simply because it is already trading in a highly profitable segment. It has identified high value clients, etc., etc. That is the same game that HDFC Life is also playing and other private insurers are playing. So this brings us to the next point that Akshat, you are extremely bullish on HDFC Life. Why not other private players? Okay, so here is the data for that. And what you will see is that the new businesses that these companies have created, HDFC Life's growth rate on these new business is very, very strong compared to even ICICI Prudential. So if I have to pick one stock from private insurers, I will pick HDFC Life. So now comes the natural question that, okay, what is the growth rate and why is now a great time to purchase something like HDFC Life? Now there are a bunch of reasons. So let me first and foremost start with the pricing game. So here you can categorically see that HDFC Life is trading at roughly 24% from its peak. So it is already trading at a significant price drop from its peak. So this is point one. Now comes the natural question that, okay, why has this price drop happened? It has happened for a range of different reasons. So first and foremost, the entire HDFC group has been trading below. And where we started the video, I categorically said that if you're holding it for the next major breakout in the market, and that is where you will make crazy amount of money by investing in HDFC stocks. So please be very clear about the vision. So first reason why HDFC Life stock has fallen despite all the good stuff is that number one, the HDFC group itself has underperformed, and HDFC Life being a part of HDFC group, it will suffer too. And that is precisely what is happening. Point number two is the COVID related deaths and COVID related claims. These have been getting settled up until 2021 and in the first quarter of 2022 also. So HDFC Life's profitability has taken a massive hit. And let me show that to you by taking you to this chart. So you can clearly see that the operating profit margin in this industry is roughly 3 to 4%. And after COVID, so this is COVID 2020. So this would not have reflected back then. And after COVID, it is hovering around 2%, 1%. And you can clearly see. Now, two things are going to happen. One, HDFC Life and other private insurers have already jacked up their prices. So that is going to benefit them. Second key thing, that the number of claims that they are going to receive in 2023, 2024, it would not be as high. And I really hope that it is not as high as during the COVID times, because COVID was a horrible period. And I really hope that such period never comes again. So if the world starts growing, then it is very, very likely that HDFC Life is set to make crazy amount of money from this point. Now, there are a couple of other important points as to why HDFC Life right now is standing at a very crucial juncture. So the first point there is that the HDFC merger is going through and HDFC Life will become a part of HDFC Bank. Now, what will happen is that they will use their relationship managers to sell you insurance also. Having that wide distribution network, having that access to clientele, all those things are going to be super beneficial for a company like HDFC Life. Their performance or their reach is going to increase automatically. And one of the key reasons why I'm telling you this is that because HDFC Group right now is acquiring a lot of small insurance players quite aggressively. They have recently completed the acquisition of a company called as Exide Insurance. Now, when a group like HDFC is being super bullish on an industry like insurance and are doing a lot of acquisition in that space, what does that indicate? It indicates the focus of the group towards insurance. I'm not saying that they will discount all their businesses, but this is definitely a very important growth area that HDFC is thinking about. So this is the positive story so far. Now you don't need to sell your house and invest all your money in HDFC Life Insurance and start yelling from tomorrow on my comment section that, you know what, we invested because of your recommendation and the stock is 0.03% down. No, please don't do that. Please think a little bit and also listen to these weaknesses. So first and foremost, insurance is a highly regulated sector, and RBI and regulators are doing a lot of chahal karmi when it comes to finance. They are literally regulating every single thing under the sun that they could regulate, and insurance by default will become a highly regulated sector. It already is, but probably it will become extremely regulated from this point. So this is problem number one. Problem number two is the distribution network that I think that a lot of insurance is now being sold through local players. Now, I'm not saying that this is a good thing or a bad thing, but this definitely dents into the network that HDFC has. This is a long-term strategic problem. Maybe it will not have any impact in the midterm, but we still need to keep our eyes open. Now, the third and the biggest worry is the climate change and COVID related aftermaths. Now, you might have seen that a lot of young people are getting heart attacks. They were completely healthy. It is surprising to everyone that why is such a thing happening? Maybe it is because of COVID. Who knows? I'm not an expert. A lot of research is going into this. So probably we'll have to wait there. Climate change is becoming a major issue right now. A lot of people are moving from place A to place B. A lot of negative things are happening due to climate change, and this is creating a lot of friction. So a negative outcome of this would be that there might be a lot more claims on life going forward, and that can dent the business of HDFC Life. So these are some of the things that we need to keep an eye out. But other than that, it is a solid business. It is leading from the front when it comes to private insurance. It has great products already, a massive distribution network, and available at great prices, and therefore I've already invested in it, and I will be building more positions in it going forward. Now, this is not a recommendation from my side for you to invest. Please do your due diligence further from this point. Just take my inputs as data points and research this further. I hope you enjoyed the video. Do check the small cases. These are some of my favorite small cases, and I will see you soon.